Yo. Yo, what's up, everybody? Happy July. Q3, big stuff, right? Awesome. Well, it's not such an exciting start. We're going to take a look at the Bitcoin chart here. You like this beautiful angry dog dragon type thing I drew? It's proof you can see anything in the charts. Our brains are very good at finding patterns, even patterns that aren't there. So we're going to take a look at what's going on in the crypto market. Our charts, we're going to look for some price predictions. Targets, we'll go over our major price levels. Quarterly closed. Where did it close? It closed at 35,000 on the dot. This is going to be the first important level we look at today. 35,000. Why is that? So currently, the monthly, the daily, and the quarterly all are a red candle. Not really that surprising. We did see, thankfully, some buying pressure off of the yearly open in the previous quarter, last month. And to see a new candle open to red is not a mind-blowing experience for me. As long as it doesn't set a lower low, this is pretty expected. However, if price and when price, fingers crossed, trades above 35,060 on Coinbase, we will have a green monthly, a green quarterly, and hopefully a green daily. So this can be a pivotal level. If you're looking for a short-term scalp, that may be a level that you look to enter a short at, something, with a stop above. If you're not scalping, if you're waiting for your longs to play out, that's going to be the pivotal level to battle for. Flipping that monthly and quarterly to green is going to be the first start to testing our next important level, sitting at 58,800. That is the close from the first quarter and the open of the second quarter. That is likely to act as resistance. So when we get over 35,000, our major boss battle is going to be up there. Below, we have the 2020 open. Very important level. Tested, held. It's only been tested twice since 2021 started. And so we do not want to lose this. We do not want to lose that open. We do not want a red yearly candle. That would not look good, not for a bull market. So on the quarterly, that's it. The close, not my favorite. I was hoping a little higher here, but what's important is the 2021 open was defended. We saw buyers. We can see that bottom wick showing us there was buying pressure at that level, and that's really the minimum of what I wanted to see. If we closed lower or even on that open, that'd be really bad. So small percent changes can be very important. So the monthly. Let's look at the monthly. The monthly also closed with June along with the quarterly. And what we see here is an interesting pattern I think is worth noting. So this starts back in March. We see a large-bodied green candle, but let's just say this is a large-bodied candle. In April, we have a thin-bodied candle. This is a doji thin-bodied candle. In May, large-bodied red candle, but so large body, thin body, large body. Let's look at June. Closed somewhat similar to April. Somewhat similar. I would have loved for it to close green. We didn't quite make it. But what we can infer here potentially is that the smaller candle body may be showing some exhaustion and sell pressure, as the small-bodied candle showed exhaustion in buying pressure back in April. So I am happy that we have a smaller candle here, but however, until we see this monthly turn green, it's not really worth that much at the moment. But it's an interesting thing. It's worth looking at, keeping an eye on. Momentum on the monthly closed as you would expect, waning momentum. Something interesting is that I was pointing out actually to a patron earlier in one of our one-on-ones, and this is actually about the weekly, but it applies even more to the monthly. What we see on the monthly is typically, once that momentum starts waning in either direction, we don't see fake outs. So if I just throw in any kind of random time period here, we're going to see, yep, momentum up, down, back up, down. We see kind of choppiness. You can see here on the selling. Momentum waned, it accelerated, it waned. I would call that a momentum fake out. Here's a great example of just a bunch of chop. On small time frames, you do see this, but on longer time frames, I was talking about the weekly to him, but on the monthly, I'll have to look at BLX, but on the monthly, this applies even more. Unfortunately, not a bullish sign. We closed our second waning momentum candle on the monthly, and on Coinbase's history here, that would imply that the market would be looking to roll over. I should pull up BLX. Maybe we'll do that later in the episode and take a look back at all the prior runs, see what happened. But in general, when you're looking, and this is the value of high time frames, they have less fake outs. They're more confident. They're more concrete. I don't think there's really anything else on the monthly here. But we take a look at the weekly. The weekly is where it definitely gets interesting. So here we are. We get rid of our levels here. We just look at the moving averages for the weekly. We see the 20 relatively the same spot, has not moved down much. That's still my target. It's 48 something. The longer it takes to get there, yes, the lower this will go, but the 20 moves so slowly that it's not going to really be significant. Below us, the 50, seemingly acting as support in the previous week, untested in this weekly. And one more important moving average below us, the 200. A lot of people have been talking about it since I was on Across the Blockchain with CryptoFace, asking about the 200 weekly. This is historically an excellent entry point. If we look back at Bitcoin's history, some of the most epic, and of course this is Coinbase, so we don't have that much data, but the limited data we have, every time it's been tested, it has been a prime entry. So that was at 31,000 in 2018, 33,000 in 2019, and 5,500 in March of 2020. Ready the fiat cannons, that's my opinion. That is almost an unbeatable entry for a long-term spot position. That's currently at 13.6. Wow. How time rhymes, man. Time really rhymes. 13.860. Very important level. Untested monthly support here. The wick high in 2019 resistance never came back to test as support. We saw October closing just below it and November opening just below it, breaking through and starting this run. Interesting to me, we have the 200 weekly and that untested monthly. Since this is a really pivotal point, I really can't see Bitcoin trading lower than this. Obviously anything's possible. The fact that it's overlapping with that high, that resistance previously, never tested as support on the way up, if anything, just strengthens my confidence that if this area is tested, it will hold. Weekly has the only glimmer of hope here. We see our momentum bands are starting to tighten up a little bit. They were moving apart, diverging, now they're converging. That's not a huge sign by itself, but the momentum on the weekly, just like the monthly, we don't see that many fake outs. Yes, we can find examples, but in general, once momentum starts rolling over, whether that's buying momentum is waning, and that would be these light blue candles turning dark blue, or selling momentum waning, be these light red candles turning dark red, we tend not to see too many fake outs. We have 3 days to go to close this weekly, and if we close it here, that is the fourth waning selling momentum weekly in a row. That would be a pretty bullish sign, and it's one of the only ones we have. If you look back, in general, momentum does not fake us out often. That's one of the few bullish things we have on the chart here. So 3 days to go, I'm going to be watching where this candle closes. A bullish engulfing candle is not far away on the weekly. That's 35.5. That would also turn July's candle green. That's what I would like to see. Any close above 35.5 would be actually a really good start, and to me suggestive that we're looking for that 20 test. On the weekly, we do have some horizontal supports and resistances. So 32,288. This is really the level I don't want a weekly candle to close under ever again. People are talking about head and shoulders. I don't think we're quite there yet. We don't have the neckline. Here's what we do have. If we take off the wicks, I've been doing this a lot lately because I think it helps find patterns. You get too caught up in the wick. You look at this, and yes, it's starting to look like a head and shoulders, but there's no neckline. What we could see, and this would validate a head and shoulders, is if we had a weekly close below 32,288. This is why I'm saying don't ever want that to happen. Weekly close below, we could see a small relief bounce tested as resistance, and that would be a pretty bearish setup. That would be a really macro head and shoulders. I am still of the opinion we're looking for that test of 48,000-ish, that area. This could be the neckline. We don't have a test of it. We don't have it established. We need a close below it. I think what this is, you might be seeing on people's charts, this is kind of people seeing what they want to see. There is no head and shoulders there yet, in my opinion. So on the weekly above us, 39,000, we have close to that 20 weekly, 49,000. I expect that to put up some kind of battle as well. And of course, the monthly, very close to these weekly closes. So I'm just going to keep that 58.8. It's a nice clean number. These are probably the major levels I'd be looking for. You can name every single number. and say, yeah, there could be some resistance or support there. But that's not going to help us narrow down our options. It's not going to help us make trades. If we look at this on the daily, we see price interacts with these pretty consistently. Actually, where we dipped off of and in May before we fell, support from January, it's where we wicked down to. And right there is that 32.288, 32.3 area. Price did close below on the daily, but the weekly closes are going to be the important aspect there. This daily not looking too strong with 2 hours left, unfortunately. I'd like to see this close a little higher. I want to see this daily momentum continue. I don't want to see it wane out. We need more upside momentum because we have a decent setup here in the daily. We just don't have the follow through yet. MACD is showing us this is softer. This is a less intense period of selling versus the 19th, mid-May. I think everyone doesn't need to look at the MACD to see that, but this is a potential setup, especially with the weekly waning momentum. We really don't want to see the daily losing it unless it plans on doing something like this, or, as we were discussing earlier, a complete fake out and move into the upside. We need to see the daily continue to pick up steam to really drive that weekly rollover. RSI with some bullish divergence on our lows. We can see this touch to 30K back in May is the lowest point in RSI. Our lowest point in price, though, is June 22nd. That's not the lowest point on our RSI. So our RSI lows have come up and our price lows have come down. That is bullish divergence. It is a good sign. If we didn't have this, things would look much more bearish. Bare minimum. Ha, bear, get it? Anyway. Issues with our highs. This was actually a big deal. So all the way through our run up here, we had bearish divergence on our highs. Our prices highs kept coming up and our RSI highs kept coming down. So we had bearish divergence on our highs. Now we're seeing some bullish divergence on our lows. Fingers crossed it plays out. The death cross came and went and really not much happened. There was a lot of hype, not a lot of follow through. Yes, we put in a lower low versus May. This lower low is not really super significant, 4% lower. This reeks of stop hunt. This reeks of market makers looking to stop out long positions, bait in short positions, looking for liquidity because doesn't seem to be much here. If we look at volume, this is telling us a story. Volume is rather low, trending low. When did this happen last? This kind of low period of volatility and volume right before our fall in May. And what happened? We have a pretty similar sideways trading period of low volume. Trend had been moving up. Logically, to me, in my opinion, that is looking for the same move. It doesn't mean we break to a new all-time high, but it lines up with what we keep talking about with that 20 weekly. There it is. That's where the real battle is. This is what I keep saying. Every single bear market started with a back test of the 20 after losing it. We lost it. There's no back test. Sure, it doesn't have to. The probability, I think, is with us. Every other bear market has started with losing the 20, falling below it, then backtesting it, finding resistance, rejecting, breaking its low, and that's when the nasty happens. Real quick, let's just throw out here more of our reasoning for this 48,000 target. If we use our Fibonacci tool from our swing high to our swing low, our 618 target sitting at 47.5 is now drawing closer and closer to that 20 as it's bending down, and they will eventually meet, and that's going to increase confidence for me that that's an important level. Unfortunately, it will also confirm that it is a strong resistance. My ideal scenario here is we move to the upside, break through the 20, kind of breeze through it, then back test it as support. That's what I'd really like to see. It might be too much to ask. We may instead see something like that to the 20, and the rejection after that would be the terrible situation, because there is always a possibility to move back up, set higher lows, test it again. A solid rejection of that 20 is going to be a spooky event, and I hope we don't have to see it. So there's our little rundowns of what might happen.